Hi, today I'm interviewing Jason Pike with Waterstone Mortgage and Pike Team. Jason, can you tell us a little about yourself and what you and your team have to offer?
I can. Thank you. I have been in the mortgage business since 1985. I primarily focus on northern New Mexico and Albuquerque. I have every aspect of lending down from first-time buyers to jumbo buyers. Everything that we do at Waterstone Mortgage is in-house, meaning that from the time that we say hello to the time we fund the loan happens within my building. I also can lend nationwide, and I'm pretty well versed. With my experience, speaks for itself, and I do what I say we're going to do.
Nice, that's great. What would you recommend for someone who's coming to Los Alamos? They're getting ready to look at housing. What do they need to do to reach out to you to get pre-qualified?
Okay, step number one, they can call us at 505-828-9400, or they can email us. But I think it's most important in that market because it's so complicated as far as you want to stand out. We want to get pre-approved, not pre-qualified. And there's no cost, there's no obligation. So we basically can take a loan application over the phone or online, labsmortgage.com,
Okay.
or come in, or a combination of any of them. Okay. And so we want to ensure the consumer, the borrower, knows exactly what they're getting into. And we also want to make them as strong as a cash buyer to make their offer much stronger and
Yes.
to make also your job easier.
Yes, that helps tremendously because like you said, coming into Los Alamos, even though the market has slowed down, it is still competitive. We had a house last week that had 6 offers on it and it was a high-priced house. So that is really important to have that so that we're really competitive when we come in and we're strong in those offers. So a lot of people are feeling hesitant about purchasing a home today. What advice could you give those people who are thinking, what can I do because my mortgage is going to be expensive with a high interest rate right now? Do I look at refinancing later? Do I look at buying down? What do I look at doing?
Okay. So if people are renting, I hate to say it, but they are buying a house. They're just not buying their own house.
Right.
They're buying a house for somebody else.
Yes.
So rent is so high in our markets that in most cases, it doesn't even make sense to rent. But you cannot think of your house payment as rent, because a house payment, a big portion of it is going towards equity, which is savings. So let's just say that you were paying $2,000 a month rent, but your house payment was $3,000. Okay. Well, you could look at that payment as being $2,000 of rent and $1,000 of going into equity, which is savings. So that's really how you have to look at that. And since my career, before I got into mortgage lending, my dad was a realtor. My dad has been a realtor since 1955, and I grew up in the business. Since ever, right? So my personal wealth has not been from working 12 hours a day and 7 days a week and going crazy. My wealth has been from owning real estate and appreciation. So I'm a very big advocate to buy houses, not because I'm the lender and I'm going to make money. It's because it's a fact. It's the best investment that you can get. And they say that the majority of America, their wealth has been based on real estate. Values come up, values go up. That up and down, up and down, up and down, right? Mm-hmm. Historically in New Mexico, they have consistently slowly climbed. We don't have the jumps like California has and then the falls, but it's a consistent, nice balance. And so that's why it's a great time to buy here. And it's always a good time to buy.
Right. Yep. No, I agree. I agree with you.
I'm sorry.
Oh, yeah. Yeah. Talk about that.
You can refinance anytime that you want. Okay. However, they say that rates are going to be down at the end of this year. Now, what is down? % lower, 2% lower? We will never see the threes again. That was a gift of COVID, which was in the big picture not a good thing, but that really is bad things for the economy, helped rates. We won't see that again, but you can always refinance anytime you want. And knowing that, it may save you money, it may not save you money, but you talked about buy downs. Mm-hmm. There are temporary buy downs and there's permanent buy downs. A temporary buy down, like the name says, it's temporarily bought down to a lower rate and it graduates up. So for instance, let's just say you're starting at 6.5%. You can start at 4.5%, then 5.5% the second year, then 6.5% the third year, and then stay at 6.5%. For what it costs you to buy down that rate, you can use that same amount of money and get a permanent buy down and maybe get 5.5% instead of 6.5% for the long time. Right. So where a temporary buy down comes into play that's really useful is if they have income that's delayed, meaning that somebody is graduating from college in a year and they're going to get a job, or we have this big car payment that's going to go away in a year, whatever it might be. So that's how we give financial advice, not mortgage advice, financial advice on this is the best thing to do. It's not all about filling an application out. It's about getting useful advice that will help everybody out, because we regardless of what we provide to the consumer, we're compensated the same way. So it's only in our best interest to obviously give the best advice.
Right. No. Yeah, that's great, because I have so many, you're right. For a while, we haven't had any of those questions because interest rates have been so low. No one cared about a buy down. No one, no one's going to refinance that bought at 2%, 2.5, 3%. Correct. They're not going to. But now people are looking like, okay, if I buy right now, is that an option? They're looking at all their options. So thank you. I appreciate you explaining that very, very well. So let's
one of the things that the consumer really has to get over, right? 6% is not a bad rate. It really isn't a bad rate. But when you add 3.25, even on 15 years, there was 1.9%, right? That was a fluke. And so if they can get over that, I think that historically rates have been above 6%, right?
Yes. Yes. So, my first house was 8%. So yes.
The last 20 years has been fairly low, but anyhow, go ahead. I'm sorry.
Great. Oh no, you're fine. You're fine. That was a lot of really helpful information. And I was just going to say that I look forward to having you back and interviewing you again. And maybe we can go over some of the different products you offer that might help my clients. So thank you so much, Jason.
Thank you so much. I appreciate you.